Real estate is one of the most powerful ways to build long-term wealth, but getting started can feel overwhelming. In this video, we'll cover the basics of real estate investing, including rental property strategies, house hacking, and beginner-friendly options like REITs. If you want to learn how to start investing in property the smart way, make sure to like this video and subscribe for more financial growth tips. Real estate has long been considered one of the most reliable paths to building wealth. Unlike stocks, which can be volatile, or savings accounts, which often yield minimal returns, real estate offers a combination of steady income, potential appreciation, and tangible ownership. For beginners, however, the world of real estate investing can feel overwhelming. Terms like rental property investing, house hacking, and REITs may seem complex at first glance, but with the right breakdown, you'll see that these strategies are accessible even for someone starting with limited capital. Let's count down from 10 to 1 as we explore the fundamentals of real estate investing and the practical steps you can take to get started. Point 10. Understanding why real estate is a wealth-building asset. Before diving into specific strategies, it's crucial to understand why real estate is such a powerful investment. Real estate provides multiple streams of wealth creation: monthly rental income, property appreciation, mortgage paydown, where tenants help you build equity, and tax advantages such as depreciation and deductible expenses. Unlike many investments, real estate also allows you to leverage borrowed money. A bank may lend you most of the cost of a property, while you only put down a fraction. If the property appreciates or produces income, your returns are magnified. 9. Starting with a clear investment goal. Not all real estate strategies are the same. Some people want long-term rental income, others prefer short-term flips, while some look for passive ways to invest without dealing with tenants. As a beginner, you must define your goal. Are you seeking monthly cash flow to supplement your income, or are you more interested in long-term wealth building through appreciation? For instance, buying a single-family rental in a steady market may provide modest monthly cash but strong equity growth over decades, while investing in a real estate investment trust, REIT, gives you hands-off exposure to real estate without managing properties. Setting your goal helps you choose the right path forward. Point 8. Rental property investing as a foundation. One of the most common entry points into real estate is buying a rental property. This could be a single-family home, a duplex, or even a small apartment building. The idea is straightforward. You purchase a property, rent it out to tenants, and collect monthly income. The rent ideally covers your mortgage, taxes, insurance, and maintenance, leaving you with positive cash flow. Over time, your tenants help pay down the loan, while the property itself appreciates in value. For beginners, it's important to research markets carefully, understand landlord responsibilities, and calculate whether the rent truly justifies the purchase. 7. House hacking. Living and investing at the same time. If buying a rental property outright feels intimidating, house hacking is a great beginner-friendly strategy. House hacking involves purchasing a property, such as a duplex, triplex, or even a single-family home with extra rooms, and living in one part while renting out the others. The rental income helps cover your mortgage, often allowing you to live at little or no cost. For example, you might buy a duplex, live in one unit, and rent the other. The tenant's rent reduces or even eliminates your monthly housing expenses. This strategy is especially powerful for beginners because it lets you gain landlord experience while minimizing your personal living costs, effectively turning your home into an investment. Point 6. REITs. Real estate investment trusts for passive investors. Not everyone wants the responsibility of managing tenants, handling repairs, or worrying about property vacancies. That's where REITs come in. A real estate investment trust is a company that owns, operates, or finances income-producing real estate. When you invest in a REIT, you're essentially buying shares in a portfolio of properties, ranging from apartment complexes to shopping centers, office buildings, or even hospitals. REITs trade on stock exchanges, making them as easy to buy and sell as stocks. They're also required by law to pay out at least 90% of their taxable income as dividends, which means they provide consistent income to investors. Point 5. Financing your first real estate investment. Understanding how to finance your first investment is just as important as choosing the strategy. Traditional mortgages, FHA loans, and VA loans can all be used to buy rental properties or house hack opportunities. Some beginners use creative financing techniques, such as partnerships, private money lenders, or seller financing, to reduce the amount of upfront cash required. The beauty of real estate is leverage. You can often control a property worth hundreds of thousands of dollars with a much smaller down payment. However, with leverage comes responsibility. If your rental doesn't generate enough income, you're still on the hook for the mortgage. That's why careful analysis is essential. Point 4. Running the numbers before you buy. The biggest mistake beginners make is buying a property without fully understanding the math. Successful investors analyze every potential purchase carefully, factoring in not just the mortgage but also property taxes, insurance, maintenance, repairs, vacancy rates, and management costs. A property that looks profitable on paper can quickly turn into a loss if you overlook these expenses. One popular guideline is the 1% rule, which suggests that monthly rent should equal at least 1% of the purchase price for a property to be considered a good investment. While rules vary by market, the principle is the same. Always let the numbers guide your decisions, not emotions. Point 3. Understanding risks and how to manage them. Like any investment, real estate comes with risks. Tenants may stop paying rent, unexpected repairs can arise, property values may dip during economic downturns, or interest rates may climb, making mortgages more expensive. The key is to be prepared. Landlords often set aside a portion of rental income into a reserve fund to handle repairs or vacancies. Insurance is also a must for protecting your property and income. Diversifying your strategy, such as combining rental properties with REIT investments, can also help balance risks. 2. Building knowledge and a support network. Real estate investing isn't something you should attempt in isolation. Beginners benefit greatly from learning from others who have already succeeded. Books, podcasts, online communities, and local real estate investment groups provide invaluable insights. Mentors and experienced investors can guide you through common mistakes and teach strategies that actually work in the real world. In addition, building a team is crucial. Real estate agents, mortgage brokers, contractors, and property managers can all play a role in your success. 1. Taking action and starting small. At the end of the day, the most important step in real estate investing is simply to start. Many beginners spend years reading, researching, and analyzing without ever taking action, which means they miss out on potential years of growth. You don't need to buy a massive apartment complex on your first try. Start small, perhaps with house hacking, a modest single-family rental, or even just a few shares of a REIT. The key is to gain experience, learn from mistakes, and build confidence over time. Once you take that first step, you'll begin to understand how real estate investing works in practice, and from there, you can scale up. Real estate doesn't have to be complicated. Whether you start with a rental property, try house hacking, or invest in REITs, there's an option for every beginner. If this video helped you understand the basics, don't forget to like, comment, and subscribe for more investing guides. Thanks for watching, and I'll see you in the next video.